What's going on YouTube? Millennial Trader here from the Millennial Trader YouTube channel. Happy New Year. Today is January 5th, 2025. I hope everybody had an amazing New Year celebration and 2025 starting off to a strong start for everybody. We're going to do a weekend crypto market check-in. Take a look at four coins today. Bitcoin, Ethereum, Ripple, and member request AAVE. We'll also take a look at the Fear and Greed Index and the Bitcoin dominance chart just to get a sense of where we are, longer term time frames, what do I envision for the rest of January, and probably conclude after that. Okay, so let's take a look at the Fear and Greed Index, and so we're coming back up to, I guess, the 70 percent range that I initially anticipated maybe about two to 3 weeks ago. Because again, as I mentioned previously, uh, generally speaking, we don't typically spend a lot of time within the extreme greed area. That's typically an area where, you know, I would liken it to FOMO, an area of FOMO, euphoria, and irrationality. For me, it would make much better sense. And historically, just looking at the historical pattern, we generally seem to be within the greed to neutral area. And as I had anticipated, once we hit that 107 mark on the Bitcoin price, that was where I had expected us to kind of peak and then kind of come back down into this area. Obviously, about a week ago, we were much further down into the actual neutral area, so that actually surprised me and caught me off guard a little bit. But it could have just, again, this is more of like looking at the emotions of the market, and once we got that initial pop up over $100,000 before year end, we spiked a couple of times, piercing that $100,000, and then ultimately we're kind of just back into this uh, 95 to $100,000 price level, and my initial thoughts were that we could anticipate seeing a blow off top for 2024, and that could kind of suppress the prices into 2025. But as things kind of changed with additional price action and a little bit more data coming in, it again, from my perspective, it could potentially be the case where leading up to Donald Trump's inauguration in a couple of weeks, we could get that secondary spike up higher, or an opportunity to kind of, if you're long the coin, another opportunity to sell out of some holdings to potentially reload later at a lower price. But that's kind of where I'm thinking we're gonna head to next. We'll probably creep back up into this higher area of greed, probably coming back to that 70% mark, and maybe once again pierce that extreme greed area just because of the euphoria with Donald Trump actually coming into office, and a few other macroeconomic headwinds potentially on the horizon, whether it's development of new ETFs, or the introduction of other coins, or legitimizing other coins, from an investment point of view, that could potentially bring us back up into this higher greed area, potentially extreme greed section again. But we'll see. I anticipate us kind of having a sell the news event as we get to Donald Trump's inauguration, but that's just my opinion, and we'll see what the charts say about that in a few minutes. But right now, we're kind of creeping back up into the 70% mark. where I anticipate will be for the most part, at least for in the short term. Okay, looking at the Bitcoin dominance chart, again, I typically link this to whenever there's potential uncertainty or fear in the market. That's generally where I see uh, a risk off environment, in which case we have a tendency to have a little bit more Bitcoin dominance in the market just because it's considered the safer bet, because there's more utility, there's a lot more backing behind it, large institutions are in it now. You have a lot more publicly traded companies that are using it as a potential treasury reserve. So that's kind of just generally how I view this particular chart now. And then, of course, obviously, if you look at it historically, you know, with the inception of cryptocurrency, you pretty much had 90% uh, Bitcoin dominance just because it was the only coin or cryptocurrency at that point in time. And as new things, new coins were created, the utility of different coins were developed, then you obviously started to see Bitcoin's dominance start to trail off, and a more risk on environment where people were willing to take bigger bets or be bullish a lot of the coins in the altcoin space. And so right now we're kind of just in smack in the middle between 50 and 60, and that's kind of just where we've been historically. I would have to say you would probably have to exclude this area back here because they're considered outliers, and really you have to look at a lot of the more recent trading activity to get a better sense of what is the typical average. So, after a significant pop up, again, probably towards that initial push up into the $100,000 mark, we came down in a major way, and that's when a lot of the altcoins started to have significant momentum. And then we've come back down in terms of risk off, where you see the altcoins coming back down, and obviously Bitcoin's the reciprocal of what's happening in the altcoins is happening in Bitcoin. So, we came back up, and so we're kind of just in I would say, just a neutral to holding, a neutral to Bitcoin dominant area at the moment. So, I kind of look at this as neutral for the time being, and I think it could be just posturing or positioning, or actually realistically it's probably a lot more of the institutions just still on vacation and not really doing much for the last 2 weeks of holidays and into the new year. I suspect going into next week and for the rest of the month, the dynamics in the market will change. But again, still favoring a bullish environment. I continue to be bullish. Like I said, in the next few charts, I'll kind of give you my analysis in terms of where I'm positioning and what I see going forward. But it's still a bullish environment. It's still risk on. There are some potential considerations that I have in the back of my head, but more so from a stock market point of view. But that's not the focus of this particular playlist. And I'm really just focusing on crypto space. But I do consider that relative to what's happening in the stock market at any given point in time, because it allows me to potentially start hedging using other instruments, just based on the position and the flows that I see. All right, so we're gonna go into the looking at charts. I'm gonna use a lot of I guess a lot of technical analysis tools that you may be familiar with, and some that you may not know of because either they're non-Western hemisphere indicators. One of them being Ichimoku clouds, and I would say the utility of the Ichimoku clouds is very notable because entirely half of the trading population in the East uses that as their basis for technical analysis. And then they kind of overlay a lot of the more traditional um, technical analysis tools like RSI and MACD. But as I'll show you shortly, and what I continue to harp on in every episode, is the platform that I use is symbolic. It's you have to pay for it. It's quite significant. The models that I run on it are also it's an add-on cost, and for a lot of the professionals and institutions, they're running the institutional trading model that I have that I'll show you shortly for the purposes of their trading and overall direction of the market. Now, not all institutions are using it because they may not know about it, but I will say a lot of the more significant institutions on Wall Street know of the model, know of the individual who created the model, and I'll just go with that for now. So um, so what I have running right now is I have sequential, and it's basically a momentum and trending indicator where after a series of 9 and 13s in one direction, that generally indicates a potential consolidation phase or a potential top in the market. The utility of it is that you can use it in any time frame. So whether you're looking at weekly or you're looking at the 60-minute time frame, the counts will show up based on the logic in terms of how it goes about determining the counts. And so I like it because of that. And also you can use it in any particular market, whether you're a cryptocurrency trader, a stock market trader, bonds, futures, currencies. It has so much utility that when it was designed 40 years ago, it's just incredible to see how it's been able to identify the counter trend opportunities in the market when they happen in real time. And I would say there's no other tool on the market today that can do it with such precision as the DeMark indicators now. So let's just go back to the actual chart. And so we're currently on, so we recently completed a 9 and a 13 exhaustion signal. And previously I mentioned that this 107 area was potentially going to be the top because we moved up enough in one direction that this was effectively an exhaustion point that I had said that came up all the way back in August of 2024. So, it's just, again, the objective nature of how these particular topping points are calculated, that's something that I'll have to explain in another video. But just know that they're objective measures that, based on how price either closes or moves past certain levels, suggest that these are potential areas of where the market could potentially top. And obviously from the week of August 24th, the week of August the 5th, that level came up at that point in time. And notice how we peaked at just about that exact same level, and since then we've come off. But what I continue to notice, and what is interesting, is that we're currently on a -3 of 9 count, and so the count is effectively the current close is lower than the close 4 bars prior. So this week 4 weeks prior. So 1, 2, 3, 4. So we're currently closing at 98,716, and the close 4 bars prior was 101,170. So that's essentially how the first 9 count is determined, and that's called the That's the setup phase of the sequential indicator, and then the the red numbers that you see on my screen is called the countdown phase, and that's effectively um, where the close is higher than the close than the than the close 2 bars prior. And so once you have a series of 13 counts, and it doesn't have to be continuous, that that is effectively um, the completion of the sequential model. And you can potentially have multiple sequential indicators, because that just indicates there's continued momentum in the market. And so there's no, I would say there's theoretically no um, there's no reason to just have one sequential count, and that's the topping point. You could have multiple sequential counts running concurrently, and that just indicates that there's so much momentum and so much strength in the market that it hasn't been able to develop a topping point. And again, there's a few nuances to indicate whether there's such pervasive momentum in the market that you have to disregard when those topping points signal, because you'll have what's called a recycle, which just, again, the completion of the 13 won't show up. It'll just say that there's a recycling point, which continues to show evidence of momentum going up and up and up. So so that's that. It's, we're currently sitting at 98,632. So long as we continue to hold above this 94,917 level, then I want to continue to be bullish Bitcoin. And for the last 2 weeks, we've closed. Excuse me, we've come back down, but we've closed in and around this 94,917, and this 94,917 level is again another indicator developed by Tom DeMark, called propulsion, and um, it's a hidden level of potential support or resistance, just based upon um, how the market has moved in one particular direction. So in a bullish environment, these propulsion momentum indicators are potential areas of support, and so long as they continue to hold, then you want to continue to lean. In this particular case, you want to lean bullish. So you want to continue to buy for the potential continuation to the upside. So that's where we're currently at right now. Me personally, I would much rather, um, you know, yes, we're on the cusp of potentially breaking this level. So that just has me a little bit hesitant, and because we're also on a -3 next week, potentially we could be at an interesting turning point, because 1, 2, 3, 4. So, potentially this coming week we could potentially create another sell. We could create a -4 count, at which point that it's still unclear as to whether I want to put on a new position. I would much rather wait for maybe 2 more weeks before we get to determine whether we close below this December 16th weekly candle, for me to get a little bit more price information, or at least a little bit more confirmation that this level will in fact hold, or whether we're coming back down to this 81,537 level. And again, this is a measured move, which suggests that if we close beneath this bearish momentum level, then we're going to come down to this this secondary level of support, which is an exhaustion signal. And again, it's a hidden level of support that you wouldn't be able to identify with some of the freely available tools. that you could look up on TradingView or whatever other platform that you currently have running for trading cryptocurrencies. And when I put on the Ichimoku clouds, I don't really see anything um, that sways me in one direction or the other. Yes, we are still bullish, and we've continued to hold this level, which is precisely in and around this 94 917 level. So long as we can, like I said, so if we continue to hold this level for 1 to 2 weeks, then that would give me more confidence to put on a new position, to potentially uh, buy for this 110, playing for this 110 level up here. But for the time being, if you're bullish, if you're bullish Bitcoin and you've been long for months and months, I would continue to hold it, um, and wait for a little bit more validation to see whether or not we close below this $94,000 level. Okay, moving to Ethereum. So this is a position that I mentioned previously for the last little while, that I'm starting to scale into it and build a significant position in it. Again, similar to Bitcoin, we recently topped out at this $4,000 level, which I thought was notable because it seems like it's a very notable area of resistance, going back all the way to 2021. So, the fact that we've tried to push through it, 1, 2, 3, 4, 5, 6 times over the past 4 years is notable, and the fact that we can't breach it, it says to me that this is I guess, a major area of resistance. And right now we have a bullish candle, so that still has me wanting to be long the coin. I'll continue to be long the coin um, up until this 3,110 level, because again, as I'll show you in a secondary chart, I continue to believe that overall outperformance between Ethereum and Bitcoin, I would much rather be in Ethereum for 2025, because, again, looking at the DeMark indicators suggests to me that that's where that's the coin you want to be in for 2025. And when I mentioned previously that the DeMark indicators are so effective in identifying turning points in the market, you know, if I just turn off the Ichimoku clouds for a second, just look at exactly where, we bottomed on this -9 count in the week of September 16th. We topped out back here once this sequential +9 count printed on the week of March 25th. And, had you recognized that symbol, or had access to these tools back then, you would have saved yourself a significant amount of drawdown, and you wouldn't have had to have, deal with sitting in that drawdown for almost 6 months before ultimately reversing. And we're at where we are currently. If I put on the Ichimoku clouds for a second, notice how we closed on the day that we had the 9 count printed. The Ichimoku cloud also held this TD sell signal, which again was another indication for me to have wanted to go long the coin, or for you to have wanted to go long the coin back then, because it was a major area of support, such that if we didn't close below it, then that indicates that there's not enough momentum in the market to continue to push the coin down further, which is why it just happened to exactly turn around at this point in time. And similarly, if I just show the Ichimoku clouds, notice how. Give me a second. Notice how this we retested these areas twice before ultimately coming back down, and obviously now we're at this was the most recent peak where it tried to get over this $4,000 level but came back down, and it current price held the the top of the cloud, um, which is notable because that is an area of support using the Ichimoku cloud. And look, we price came down, it pierced the cloud, but it didn't close the cloud, and it held above this uh, bearish momentum level, which again suggested to me that that was an area of support. And obviously, those in the know, uh, and specifically who know how to trade this indicator, both the DeMark indicator and the Ichimoku cloud, recognize that this candle closing above this level an area was a good way for you to have bought the dip without significant risk that it would continue to the downside. So for me, I continue to be long Ethereum. I will continue to keep adding to my position over 2025 because that's where I think um, the best outperformance will be relative to Bitcoin. And if I'm looking at the traditional MACD, again, we're potentially curling back up into what could potentially be another run into to retest this $4,000 level, and hopefully pierce through it to potentially reach this upper level target, which I have of $5,047. So I'm continue to be bullish. It's a bullish environment. Yes, you're going to get periods of some small drawdown, but in essence, I think Ethereum is the coin you want to be in for the long haul into 2025. And when I look at Ethereum to Bitcoin from a relative outperformance, I'll show you why I'm making this bold statement for 2025. Just bear with me. Okay, so this is a chart of Ethereum relative to Bitcoin. And notice how, again, every time, whenever there's a 13 or a 9, that potentially indicates a turning point in the market. And so notice how exactly at this most recent minus 13, which happened to be towards the end of December, it exactly uh, captured the bottom for the year relative to Bitcoin. And now over the past since then, for the next 2 weeks, Ethereum has been outperforming Bitcoin in a major way. I'm anticipating that we reach all the way up to this resistance area after having spent pretty much all of 2024 underperforming Bitcoin. Um, and so that's why I also consider this to be the actual bottom for the time being. And when I put on Ichimoku clouds, again, I get another confluence of signals because this low, which is this price bar down here, the November 18th price bar, happened to mark we didn't close below this stop out level, and we retested it again most recently December 23rd, which again we got close to the stop out level, but we didn't exceed it, and since then the price has turned around. So to me, that's a good low, that's a buyable low, and why when I'm looking at Ethereum, I that's why I'm saying I continue to buy Ethereum um, on the dips because I believe it'll outperform Bitcoin into 2025. Ideally, again, at least for the next seven weeks, we could potentially get up to this area that I've highlighted, which could potentially put it to, let's go back to Ethereum, which could potentially mark it back up to this $4,000 level. And you know, if I'm trying to relate it to price, that's kind of what I see right now. Okay, so let's move on to Ripple because this is another coin that I'm currently in that I anticipate will potentially we may have another opportunity to potentially um, reach all-time highs, or at least retest the most recent highs of $3, $2.90. So I'm looking on. This is Ripple using the Kraken exchange. I use Kraken for this one because it looks like they adopted Ripple earlier than Coinbase, so I don't have a lot more. I have more price data using Kraken's exchange, and that's a platform that I use to trade. So again, in my previous video, I mentioned that Ripple was basically consolidating for effectively 2 years, 3 years almost. No, actually 3 years between, and it continued to hold this 50, whatever this 30-cent low was. So that was notable to me right here. And we were just trading in a range between 30 and 50 cents for 3 years. Excuse me, for 3 years. So the fact that this 13 signal came up, this minus 13 signal came up, had you identified this particular point and gone long, you would have made, what is that, 400% gain. And so, had you identified that leading up into the Donald Trump inauguration, plus some Ripple specific news, you would have enjoyed a significant amount of gains from there. And what's notable to me is that looking at the Ichimoku cloud, we continue to hold this exhaustion level, and we've also held this other. We're holding two exhaustion levels, one from current price, and this level came in back in July of 2022. So that to me is bullish, and why I want to continue to own the coin, potentially for a retest of the highs back in January 2018 of 275, and then again potentially all the way back up to this $3.35 area. What's notable too is that the momentum from MACD, it's so strong. The disparity between the two lines just again indicates to me that there's so much momentum and pent up demand in the coin that while it was potentially about to, we could potentially see a slowdown. Again, Ripple has just recently turned around, and we could potentially see another leg higher. So I continue to be long Ripple. Again, you have to give, if you're trading this from a tactical point of view, or day trading it, again, you have to understand and recognize that with the smaller coins, you have to be willing to tolerate a lot more variation, or give yourself a much wider stop out point, because the coins and the exchanges and the slippage happen in a lot more they're a lot wider is what I was trying to say. The spread, or your stop out, has to be a little bit wider than what you would typically use if you're trading Bitcoin or Ethereum. Yeah. So for me, I continue to be bullish Ethereum. I continue to be bullish Ripple, because I anticipate that this 13 was the low, was the secular low. So that'll be the low for years and years and years. If if I get the opportunity to rebuy it, to continue to add back at this 169 level, I will. I'd gladly do that, because again, I continue to think that there's um, utility in Ripple as well as Ethereum and Bitcoin, but I'm just looking for outperformance at this point in time, and those are the two coins that I currently want to be in. Okay, let's look at the last coin. So one of the members had asked me to take a look at AAVE, or I think it's called Aave. So, this is interesting because when I look at, to the untrained eye, or just to the retail trader, how would you know at any particular point in time whether price is going to continue to go down, or if that was the bottom? Or if you're buying at the top, how do you know that you didn't just buy the top? So one of the easiest indicators and one of the freely available indicators is the Ichimoku clouds. And there's a lot of material on Ichimoku clouds. Some of it is not necessarily correct. There, I've been able to identify what those errors are from the people that write about it. And for me, that's my competitive advantage as to why I don't really explain to the public in general how to use it in particular. And I learned indirectly from a veteran on Wall Street, and he was gracious enough to explain to me and his following, how to effectively use it. So that's that. So obviously, looking at the lagging line, we're above current price, so that is bullish. We're also above current prices above these, these modified moving average lines. So the conversion line is basically the midpoint of the 9 trading days price, and the baseline is the midpoint of the last 26 trading days price. So obviously one is the conversion line is a much faster moving average versus the 26 period baseline. So so long as we continue to hold above these levels, then that is you should continue to want to be long this coin. Now let's take a look at let's put on the propulsion indicator as well as sequential, and see what indication, what I see based on the chart. So interestingly enough, we're currently on a sequential 9, so that's notable because that could potentially be an area, our potential stopping point, or an area where you potentially could consider shorting the coin if your exchange allows you to. But again, going with the notion that we're still in a bullish environment, I generally wouldn't want to put on new exposure at this point in time, because whenever price completes a 9 and 13 and you're looking to put on new exposure, these are generally areas where it's a really bad time to be putting on new exposure, because your potential for drawdown is much higher than if you identified it, down here or at the beginning of where the model starts. So for me at this point in time, I don't want to put on any new exposure in Aave, especially because we've reached this full exhaustion level. To me, I think it's not risk reward. It's not worth putting on new exposure. Yes, you could potentially play for a retest of these all-time highs, but I think we've moved up in such a short period of time that the risk reward it's just not meaningful enough for me to want to go long the coin. And they're looking at just these candles, right? We're smack dab in the middle of this weekly candle. So to me that's notable because there's a lot of indecision that could potentially be at work, and I would much rather, if I wanted to put on new exposure, I would much rather wait to put on new exposure here. So I would rather put on a new long at this 262 level or at this bearish momentum level of 244, at which point there's enough support based on the baseline that if I'm wrong, I'd be comfortable stopping out with a 6 point excuse me, a 9 point move, versus if I were to put on a trade now, I'm potentially risking almost 100 points from where we currently are. So the risk reward is not favorable for me to want to put it at this point in time. Yes, MACD is also still bullish, but I have to trust the signals that when I see them. And for me, this is not an area where I want to put on new exposure. So that's it. That's it for this week. I will look to put on a couple more videos this week. I'm also in the process of looking at talking about stock markets using the same models. I haven't necessarily developed a schedule for that, but I'll definitely have the first inauguration of that video come out, and and I'll notify all my followers at that point in time. So thanks for watching. If you like this video, hit the like button, subscribe. Let me know if there's any other coins you want me to talk about, and if there's anything that you need a little bit more explanation on, in terms of whether it's Ichimoku or sequential or some of the other indicators that I use. Let me know. I may do a video just kind of explaining, I guess, the technical aspects of it, but I also understand that just watching technical is kind of boring, so I'll try and do a little bit of teaching in the actual videos that I do, but I may do separate ones just to talk about different components of the models and kind of make them shorter in nature. All right, that's it. Millennial Trader out.